Hello and welcome again. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is Thursday, November 5th, 2020. Hope you got some sleep last night because I think I finally did. As we are in suspended animation, election outcome is still eluding every one of us. Not only we here in the United States, but the world around us is literally scratching their heads saying, how could this even happen, right? So we have no idea, right? So why is the market up even though we don't have an election outcome? So let's address that right now. So I prepared for you in our daily update today. Markets are up, in fact, significant over the last 3-4 trading sessions, almost erasing the pullback that we saw in the month of September. September, we had a negative month, if you will, in October, sort of in between those 2 months because the market was anticipating a blue wave. A blue wave, quite frankly, just to refresh your memory, is all one side of, so the president, the House of Representatives, and the Senate all are, in this case, it would be a Democratic sweep, which didn't materialize. It didn't matter if it's Democrat or Republican, a sweep either way, historically speaking, markets don't like that because ultimately our system is set up for a checks and balances. And so the blue wave didn't materialize, therefore it was pricing in, because if you remember, the polls were saying that it was almost a certainty that that was going to happen. Well, guess what? Polls have been wrong. Modeling, has been wrong in terms of coronavirus modeling. Everything has been wrong in terms of projections for 2020, including having an outcome for the President of the United States. Again, this is 2020. So why are markets up? Because they were pricing in and they have to unwind that trade because it was wrong, right? So, but going forward, markets are forward looking. So there's a relief rally, 5-6% over the last few trading sessions, plus or minus. Markets are forward looking and they're actually looking at sort of the things that I put up on the board. Today we have the Federal Reserve, Jerome Powell, basically reiterating his support, saying that the market, or the economy is looking stronger, moderately getting better. Employment picture is a different story. We still need to work on the employment picture, but if you think about it, over half of the jobs that were lost, both in March, April, and May, are now added back or brought back. So at least we have a 50% recovery in the labor market in such a short period of time. That is a win, even though the Federal Reserve has acknowledged the fact that there's more that needs to be done. Now that lies on Congress itself, and if Congress could actually do a stimulus 2.0. Again, we have to hold our breath on that one. We still have to decide who's in Congress. Don't kid yourself on that one. That's sort of our concern here at Blanke Schein Wealth Management. If you look at the state of Georgia, even though the Republicans in total at this present state moment in time have a 2-point advantage in the Senate, that could trigger, in Georgia specifically, all eyes there, a runoff in January for the 2 senatorial seats that are up for grabs. So it's statistically within the margin of error that would trigger that. And long story short, we then still wouldn't know the outcome to Congress even beyond 2020. So gosh, this is becoming more complicated than we could ever imagine. So let's just hold off on the stimulus talk, but the market does know there will be a stimulus. It won't be as large as once thought if Congress was all sort of one party. But we know that tax policy at the moment, we're not going to get tax increases. We're not going to get the repeal of the Trump tax policies bringing down corporate tax rates and a few other things for personal rates as well. The GDP, we just had that reported last Thursday. I don't know if it was reported on the financial networks. They're all focused on sort of negative headlines for political purposes. But that being said, in case you missed it, the GDP had the best snapback in history. 33.1% in one quarter, an annualized rate that's over like a 7.9% annualized rate GDP. That is significant. That shows that our economy, again, was strong. We have a strong economy. I put it up here. Strong economy when we started before the coronavirus pandemic earlier this year. In fact, unemployment, if you think about it, was at a historic 55-year low. Economy was rolling super strong. An underpinning of that, where do I have it? Real estate. Real estate continues to be super strong because the credit markets are stable and interest rates are super low. And the Federal Reserve says they're going to work on keeping everything at all costs. We have divided Congress. We have also, markets are looking forward. We're going to have, in 2021, even beyond therapeutics, treatments, and vaccines. And again, the medical community now knows how to not put you on a ventilator as soon as you show up to the hospital, because ventilator really didn't work out too well for those who were early in the coronavirus, unfortunately. So the medical community has learned a lot going forward. They have other treatments and therapeutics that have also come online. And again, don't forget, we have not only the US, but the world is working on treatments and vaccines as well. So that's a coordinated effort that hasn't stopped just because we don't even know the election outcome, and we've been all tuning in to find out what the story is there. And earnings, keep your eye on earnings. That's ultimately the underpinning. And right now, the third quarter earnings that are being reported by corporate America have been exceptionally strong, in light of and in lieu of everyone can't go to the store and shop, and the business can't be done or conducted as traditionally has been done in the past. But businesses, though some better than others, have positioned and pivoted and transitioned to embrace this new world that we're in and be able to eke out, in most cases, more than some, actually gain market share and post some super positive earnings. In fact, I don't know what the latest count is, but the earnings report came in higher than well anticipated or even projected by, again, the experts on Wall Street. So all the polls, projections, and modeling has been wrong for 2020, and we are all in suspended animation. But we know the Federal Reserve is there to help. We know that Congress, at some point in time, when we get Congress settled and the elections settled, we'll have a CARES 2.0 Act. We don't know what kind of sort of targeted or stimulus will come of this. But all of this right now, as it stands, the market sees as a positive going forward. So that's why markets are up, and that's what we've been sort of talking to you guys about on a daily update for everyone here at Blanke Schein Wealth Management. We're monitoring this as it evolves immediately and by the minute. So thanks for the time today, and we'll continue with our daily updates. Remember to like and subscribe and share with your friends and family. And if you have a portfolio that's outside of Blanke Schein Wealth Management or a 401k you'd like us to review, we're happy to do that. We're doing a lot of that for portfolio positioning for 2021. Or if you have some money at the bank that just isn't working as hard as it should be, give us a call. We're happy to help. Thanks. Take care.